Welcome to the Passive Income Machine podcast, where we show you how to break free from the grind and achieve real financial freedom in 10 years or less. My name is Ryan D. Lee, and I've helped thousands turn income into cash flow, trade fake money for real assets, and take back control over their time, their wealth, and ultimately their life. Each week, you'll get strategy, tools, and mindset to build your own passive income machine. So my friends, sit back, relax, and enjoy today's episode. All right, my friends. Welcome to the podcast episode today. It is one of my most favorite topics of all. I'm going to be sharing with you a strategy, a tool that has quite literally changed my life. And it comes in the most unlikely places. It's one of those tools that is hidden in plain sight that you have to kind of unlearn what you think you know about money to even recognize its potential and power. So today, I'm going to be sharing with you a tool, a strategy that can help double every dollar that you invest into the future. You're going to be entering the world of leverage. And as we discussed in the last episode, we talked about this idea of the passive income machine. The passive income machine is quite literally designed based on principles, fundamental economic principles that can be strategically applied to you, to your situation, no matter where you're starting from, no matter the resources that you have. And the central part, the foundation of the passive income machine is the vault. It's where your money flows to. It's what you leverage your money out of to go acquire assets. And eventually, when you're ready to shift into the income phase of your strategy, it's what delivers tax-free income to you. The way we measure success using the passive income machine is achieving financial freedom in 10 years or less. The way we actually receive that and do that in a much faster time frame is by eliminating taxes from the future. And the vault has the ability to deliver tax-free income for the rest of your life. Now, before I dive in to the nuts and bolts of what this strategy is, this is the Vault financial strategy. And most people misunderstand what I'm about to share with you because they have a preconceived notion of what money is, where money should go, and how money can be used. So for the sake of this episode, whether you're a longtime listener or a brand new listener, whether you have a vault or you have no idea what I'm talking about, what I'm going to ask you to do for the next couple of minutes is put your preconceived notions, your beliefs up on a shelf. Allow an open space for the next few minutes to have a new idea implanted into your brain that has the ability to potentially change everything. I'll never forget when I personally learned about the vault. I had already been investing in real estate and I was looking for a way to gain more leverage, to have my money work harder for me. And I was introduced to a book called Becoming Your Own Banker. Now, I had no idea what this meant, but when I read this book, I was dumbfounded. I was blown away. And ultimately, I think when I read this book, this is what opened the door to really believing, or at least attempting to believe, that everything that I had been told about money was dangerous, misleading, or an outright lie. Because what I read in that book defied logic. It defied my mindset about what was possible with money. Now, I want you to consider this, okay? In your world today, you probably have insurance, okay? Insurance of some kind. You have health insurance, you have auto insurance, maybe even you have life insurance. And let's consider how most people consider life insurance. If you follow kind of the Dave Ramsey ethic when it comes to insurance, you buy term because it's kind of a necessary evil according to, gurus out there who invest in the market. You buy term, the minimum amount for the least amount possible, and you invest the difference in something that will grow your money, like a stock account, right? Now, I don't dispute the rationale behind this. We need to keep our money working and growing. But what if there was a better process to keep our money not only working and growing, but to actually double the money that we had in our life? Well, we have to call back into question what we believe insurance is. So most people, when they buy term insurance, they go to a term life insurance company or an agent, and they say, I want to get as much term insurance as I can, but I want to get it for the least amount of cost possible, because the only way you win in that scenario is if you die. When you die, the insurance company, as long as you've been paying your premiums, pays out a death benefit to your beneficiary. But what if you were to go into an insurance company or sit down with an insurance agent and flip the script on its head? and say, hey, insurance agent, I want to give you as much money as I possibly can. And in exchange for that, as much money as I possibly can, I want you to give me the least amount of death benefit necessary. Now, that sounds kind of ridiculous and backwards for most people, and for most people it is. But when you build a life insurance policy this way, it's called an overfunded, high cash value life insurance policy. I call it a vault for simplicity. The vault is an insurance contract, and the reason we're using an insurance contract versus anything else, insurance is one of only three locations where you can actually eliminate taxes from your future. Consider this. If you want to generate a tax-free stream of income legitimately in the future, you have to invest in municipal bonds. If you believe in the debt-paying ability of the government, good luck. You invest in a Roth IRA. There are contribution limits, so it's hard to get a lot of money into a Roth IRA, or life insurance. Now, again, most people believe life insurance and they buy life insurance for the sake of life insurance. But when you overfund a life insurance policy, essentially what you're doing is you're sending in as much money as you possibly can. I want you to think about the amount of money that you're capable and willing to save for your future. That money needs to go somewhere. What if its staging point was an overfunded life insurance policy? Once it arrives in one of these accounts with the minimal amount of life insurance to simply stay qualified as life insurance, you have all of this cash inside of an account where you get some prolific benefits on that cash. You begin immediately to receive a contractual guaranteed rate of return. The insurance company ensures that your money will compound and grow for the rest of your life. Now, in these insurance contracts, we only use private insurance companies. They're called mutual companies. They're some of the most well-known companies and successful companies in the history of our country, but they're owned by their policyholders. Now, you can't buy stock in them. Think of companies like New York Life, Mass Mutual, Penn Mutual. These are companies that are owned by their policyholders. And in addition to getting a guaranteed return, these companies return the profits of the company back to the policyholders in the form of a dividend. So now your money is growing and compounding. It's growing and compounding tax-free because we follow the IRS guidelines and still keep your account qualified as life insurance, so it's tax-free. But one of the most unique advantages and features of your cash value is it opens up a private line of credit that you can now start to leverage and access. And I want you to consider this, my friends. If you ever have a desire to be financially free, I believe ever, but especially in 10 years or less, you have to open up and enter the doorway of becoming a more sophisticated investor. You have to start to understand that leverage is the key. Without leverage, you are fighting against things like taxes, inflation, and interest rates. With leverage, you are legitimately using the economic forces inherent in our economy to make you wealthy. Leverage will make you wealthy, inflation will make you wealthy when you use leverage. I'm going to explain that a little bit more as we go. So now you've got this money in this account. And let's say you've put in 100, 200, 300, 400, 500,000. It doesn't matter. Whatever amount of money that you have in this account, here's where the game changes and the doorway of leverage opens up. Now, again, go back to the original question of this podcast. What if you could turn every dollar that you invested for your future into two? That would by default double the pace at which you could accelerate towards achieving financial freedom. If every dollar that you sacrificed your time for can now be duplicated into two, you're now working twice as hard. And this is exactly what the vault does. The vault gives you an access to using leverage. Now, here's how it works. Let's say you've got $250,000 that you've accumulated either all up front or over a period of time inside of the vault. The vault is now growing and compounding your money completely tax-free, uninterrupted by the stock market without any risk. It doesn't matter what's happening in the world. You get a return compounded every single year for the rest of your life. Hey, just jumping in here for 1 second. I really hope you're digging this episode and seeing massive potential for your future. But look, none of this happens without the How to Retire in 10 Years Summit. It's the financial freedom event you absolutely cannot miss this year. We're talking about step-by-step strategies for passive income, financial independence, and total control over your money in 2025. Early registration is happening right now with an exclusive bonus for acting fast. So stop waiting, click the link below, or go to retireintenyears.com, and I'll see you on the inside. Now, back to the show. Now, Compound interest is an amazing tool, but most people don't actually earn or receive compound interest because they break their compound interest curve before it ever starts to gain the real momentum possible after 10, 20, 30, 40 years, right? And the way they break their compound interest curve is one, they put their money in a place that inherently has risk, and so they lose money, and now they have to recover what they've lost in addition to earning a rate of return to grow their money, or they break the compound curve because they don't have enough patience, right? They have money in, it's growing, it's compounding, and then they need money for a short-term emergency, a family vacation, whatever, and they pull money out. And the opportunity cost of breaking compound interest is massive. Given a long enough time horizon, let's just say over 50 years, you breaking compound interest one time could 10x, what could cost you 10x more than what it cost you to break the compound interest because of the lost wealth that would have been possible if you just let your money continuously compound. This is what the vault allows you to do. The vault allows you uninterrupted compound interest, but you need your access to your capital today to accomplish all of your short-term goals. What are your short-term goals? Well, if you're listening to this podcast, it's achieving financial freedom in 10 years or less. And the way we're going to do that is we're going to go buy cash flowing assets, real estate, which we'll talk about in the next episode. But here's the most dynamic and powerful part. You get uninterrupted, complete private access to a private line of credit with the insurance company. So going back to our example, let's say you have $250,000 of cash value that you've built up in your privatized insurance policy that we're calling a vault. It's growing, it's compounding, it's tax-free, but at the very same time, you get the ability to leverage the value of your policy, the cash value, to accomplish whatever goals you have. When you leverage the value of your policy, you actually take a policy loan directly from the insurance company, whether it's Mass Mutual, whether it's New York Life, whether it's Penn Mutual, or any of the other companies. When you take a policy loan, the insurance company literally sends you their money. They don't take it out of your account. They use your account as the open line of credit. So however much cash value you have, that's your open line of credit. And they use your death benefit as collateral. They already know that they owe you money. And so if you were to die tomorrow with an outstanding policy loan, they pay the death benefit minus the outstanding policy loan. But here's the magic. Now you have access to the value of your capital today without ever breaking or uninterrupting compound interest. Now your money is literally doing two jobs at the very same time. And as you'll learn about in the next couple of podcasts, our premier strategy for leveraging the vault is buying cash flowing assets. We then use the profit from those cash flowing assets to replenish our line of credit, and we repeat this process over and over and over again. Now, I want you to consider the alternative, okay? Because the vault, it only has value compared to your next best alternative. So consider this. Your money always needs a place to live. It needs a staging ground for wherever it's going to go. Even if you're buying real estate, you need a staging ground for your money. Now, most people today would choose to put their money in a bank, right? That's how most people, choose to save or have money liquid and available for opportunities. Now, I want you to consider this. When you go put money into a bank, what is a bank actually doing with your money? It's kind of crazy when we really think about how banks are set up. You put your money in, they give you some account, maybe they give you a little bit of interest with it, but the second you put your money into the bank, they don't just, put your money back in the vault and, write a little post-it note on your stack of cash and say, hey, this is Ryan's money. He needs it when he comes back to get it. No, the bank actually turns around and they leverage your money. They leverage my money to run their entire business. They turn around and they go make loans at a much higher profit than what they ever pay us in interest. And so when you really think about a bank is leveraging other people's money to build the most profitable financial system the world has ever seen. Now, you might also be thinking to yourself, okay, that's great for banks, but how does that apply to me? Well, go back to where the first book I read on this topic. I was reading Nelson Nash's book, Becoming Your Own Banker. And in that book, he talked about how banks work and how you could apply the same philosophy, the same strategy to your own money in a properly designed life insurance contract. That's exactly what the vault is. You get the ability to grow and compound your money, but you get the ability to leverage other people's money to go accomplish your goals. Who are the other people's money? Well, it's the life insurance company. It's the most unique provision ever designed in any financial product that you have the ability to take an approved, unquestioned line of credit from the insurance company. Now, here's a couple of features about this line of credit. The line of credit is private. You don't have to apply for it. You don't have to ask permission for it. Whatever cash value you have in your policy, that's your access to an open line of credit. Number two, it's a private line of credit, which means it doesn't affect your debt to income ratio. It's not going to show up on your credit report. It's a private line of credit that you control 100%. And number three, because you're in control of it, you can choose how and when, how often and at what rate you pay back your policy loan. You control the entire process. And with one step, with one move, with one financial IQ insight, you step into the world of becoming your own bank. You step into the most powerful financial playbook of all, leverage. You get the opportunity to use leverage. Now, when I read Nelson Nash's book, at first I had to go through kind of the cycles of grief and despair and frustration and madness. I thought I had been lied to. I had been lied to. Like, how on earth could I have been told for my entire life that insurance could do this when I thought it was just by term? It's a necessary evil. Insurance companies are bad. Now, I'm not saying all insurance companies are good actors, but the insurance companies that we work with, they're private companies. They're owned by you and me, the policy holders. And because they're mutually owned, they don't report to stockholders. They're not trying to time their profits and losses and all of this stuff for quarterly earnings reports. They're making decisions that are in the best interest of the success of the company, which we mutually own, over a long period of time. This is why companies like New York Life, they've paid a dividend to their policyholders, people who have had these type of policies for almost 200 years straight. I want you to consider that. What would your financial life look like if you had 200 years of success, of foundation, of never compromising, never failing on a financial promise, standing behind you as the foundation of your financial strategy? And in addition to that foundation, you could leverage that foundation to accelerate the success of your financial goals. Now, I thought I'd been lied to, so I did a little bit of research and digging to find out, well, if it's so good, who else has it? Consider this for just a moment, okay? Banks themselves are the largest owners of high cash value life insurance. I think it's so ironic. I think it's just so funny that banks don't even store their own reserves in banks. They know the power of life insurance, and banks have a standing order in most cases to buy as much what's called bank-owned life insurance as they possibly can. As of the time of this recording, the banks, over 3,200 U.S. banks, have over $205 billion in high cash value life insurance policies. That's not death benefit, that's cash, because banks, they're required to store a certain amount of reserves on hand for the money that they're lending out. And banks don't even keep their reserves in the bank. They know how crappy it is. They keep their reserves in a bank-owned life insurance policy. Politicians, some of the most well-known individuals in the history of our country, including our former president, Joe Biden, have stored millions of dollars inside of these privatized accounts. Why? Well, because they're private accounts. You can put as much money in as you want, and you eliminate the IRS from the future. Some of the most successful and wealthy individuals in today and in the past have used these type of accounts. I want you to think Warren Buffett and Bill Gates. These two individuals have stored billions of their own dollars inside of these accounts. New York Times wrote an article on them a couple of years ago, and they talked about this secret account of the wealthy. All it is an overfunded whole life insurance policy. Go look up Jim Harbaugh. When Jim Harbaugh left he left the San Francisco 49ers to coach the University of Michigan, he had $14 million of his contract funding a whole life overfunded cash value life insurance policy. There was a whole article written on it, and people were questioning, scratching their heads, saying, what the heck is this dude doing? The wealthy understand one thing that many people don't. In life, in finance, in wealth, it's not what you make, it's what you keep. And no matter where you're at today, my friends, you've probably made hundreds of thousands, millions of dollars in personalized income. I want you to consider this. How much money has come into your life, and the kind of the gut in the punch, or the punch in the gut, is how much money has flown out of your lives, right? You have money coming in, and before we know it, we prioritize everyone else but ourselves. We pay our bills, we pay the bank back in mortgages and car loans and student loans. We go out to eat a little bit, we go on vacation, we do all of this stuff, and then most people just try to save whatever's left over. And as you can imagine, it's not very much that's left over. And this kind of compounds into the retirement crisis that we're facing today. But what if you had a place that you could store your capital? You still had access to leverage your capital so you could achieve all of your short-term goals and stay on track for your long-term goals, and you could eliminate taxes and market volatility from your equation. This opens up an entirely different world. So today, in my life, I've used my vaults, plural, because over time I've grown into bigger and bigger and bigger vaults as my capacity to save and grow my wealth has grown. But over the years, I've used my vaults to buy real estate, to start businesses, to fund startup projects, to my son's getting ready to go to college. We're paying for his college. We've used it for family vacations. We've used it for medical expenses. We've used it to fund and build our primary residence. We've used it for so many different things. And why would I do this? Well, because I want you to consider this. Every dollar that was previously flowing through my system, I was making it, I was spending it. The opportunity cost of that is so massive. But if I have a centralized place, a vault, that I could store money and flow money into my system and keep it in my system and still leverage the value of it today to accomplish my short-term goals, I now can go from saving a little bit of money to saving a lot of money. Every dollar now has a position in my personal economy. It has a job in my personal economy. And my objective and goal is to flow as much money that was previously flowing through my system to flow inside of my system and stay in my system. That way it's compounding for long-term wealth, and I'm using it for all of my short-term goals. Now, I want you to consider this, okay? Leverage is the key to achieving financial freedom in a rapid period of time. And the very first objective that most people use their vault for is to acquire real estate. And I want you to consider the fact of acquiring real estate. Your money, once you put your money in the vault, it's now doing two jobs at the same time. I call this dual compounding. Your money is growing in two asset classes at the very same time. And in the next podcast, I'm going to talk about all of the value of compounding your money inside of real estate. But if you could turn every dollar that was flowing through your economy into two and flow your money into your economy and have it working in your economy and never leaving, can you imagine what would be possible? How much more wealth you could possibly create? My friends, the objective of the vault is to privatize your wealth. It's to make money and keep it. It's to build a banking type system that you control. It's to use a vault financial strategy that has been around for hundreds of years, and the wealthy are using it right now. The only question is, are you going to operate and act like the wealthy? Or are you going to fight the system, hoping that the system will work in your favor someday? So my friends, the objective of this today was to open your awareness. It was to help you understand that the second gear inside of the passive income machine is the vault. And in a future episode, I'm going to record an entire podcast on how we actually use the vault at the tail end of all of our accumulation. Once we've used it to build up our assets, once we've used it to buy a bunch of real estate, once we've used it to accomplish our short-term goals, the long-term purpose of all savings, no matter where it goes, whether it goes into a 401k, a vault, or anything else, is to produce a stream of income. And the biggest debt or the biggest liability to that future stream of income that you have, that most people have, is taxes. The vault allows you to eliminate the IRS from your equation, both now and forever in the future. And what that ultimately means for you is as you eliminate the IRS, you become 30, 40, 50% closer to your financial freedom target, simply because you don't have to pay taxes first. You're taking a tax-free stream of income, and this is what the vault allows you to do. So with that being said today, my friends, I hope you enjoyed this episode. If you have not done so yet, do me a favor, give me a rating, give me a review, and share this podcast with a friend, because friends, they don't let friends retire broke. Join me on the next podcast where we will dive into the topic, the detail, the passive income machine gear of turnkey real estate. All right, my friends, that's a wrap for today. If you're serious, though, about turning everything we talked about into your new reality, there's only one place you need to be. It's the How to Retire in 10 Years Summit. This is your chance to learn exactly how to unlock financial freedom and build passive income in 2025. Early registration is live right now with an exclusive bonus for our early action takers. Don't miss out. Head to the link in the show notes or just head on over to retireintenyears.com and I'll catch you at the summit.